Welcome to the 23rd episode of The Crossroads, a weekly financial show for our generation. And for the listeners, welcome back to the Long Game Podcast. On this week's episode, we are joined by Rob Petrozzo, the co-founder of Rally Road, which is a modern alternative investment platform. They're building a lot of cool things. Like, it's way more than just an investment app. But before we dive in, just so the listeners kind of have a little context, and I personally love hearing founder stories. If you wouldn't mind giving us just a little context on your backstory and just kind of how you got to where you are now and what kind of led you to starting Rally.
For sure. Thank you for having me. And the number 23 Jordan episode, it feels very fitting. So I feel like I'm in the presence of greatness. I appreciate that. But long story short, myself, my two co-founders, Max and Chris, we've known each other for a long time. Max was in banking for the better part of his career for 12, 13 years at Barclays and a few other spots. Chris, someone I went to high school with, he was like just the really smart kid in high school that you want to be around, that you knew was going to be super successful, and anybody that can kind of catch his tailwind, you want to sort of do that. So I had the opportunity to sort of, be around him early, and he had built a couple of companies, really, really successful operator, and knew how to create businesses. And then I was kind of like the odd man out as a creative, but somebody who went to art school and was a designer and was kind of like the last piece. So we kind of played off all of each other's sort of strengths. But at the same time, we all had these similar stories. Like, we all grew up, myself and Chris, in Brooklyn. Max was in Germany, but was in New York most of his life. And in New York, you're kind of surrounded by like all these aspirational things. And you have all the stuff when you're a kid that you want. Then you grow up and you assume you'll be able to get it. But so much of that stuff had gotten so far out of reach for us. So for me, I had come from, again, like a design and art background. I worked in music for a long time. You see all these things kind of like coming to life and getting expensive and getting important and getting popular, and you're kind of left behind when that happens. So we all had these kind of missed opportunities. We started thinking about working together on something, and we all had this domain expertise. And we were like, you know what? There were all these things we care about, these collectibles and these really interesting pieces of art and culture that have really made a lot of money for a very small percentage of the population, for the super wealthy who have access to the best art and the best classic cars, the best watches. But regular people who know it, who love it, who have those aspirational goals, don't own equity. If we can create something that looks and feels like the apps, the Robinhoods of the world that everybody uses to trade stocks, but do that with those assets that you recognize, that have great stories, that you might know everything about, and do that fractionally, and do that where you can trade those shares, we could be onto something. So we started putting it on paper in 2015, 2014. Then, now 2022, so many years later, it's a big platform and everybody kind of gets it now. But everybody had those aspirational goals. There's no one that was, growing up in the 80s or 90s that doesn't have these cool things they remember and doesn't know how out of reach those have gotten. So our goal was always kind of opening up those opportunities and making it, making the aspirations real equity. And that's kind of where we're at now.
Yeah, it's all about access to more people. Like, I think that's where, when I first saw who you guys were, that really related to me, because trading, my mission too is like create access for people who don't normally get access to financial advice. And what you're doing is, hey, like this side of investing that people think are really cool, Michael Jordan cards and old cars and watches, like things that like you grew up and you're like, man, that's really cool. That person has, I'll never get to do that. You now have the ability to do it, but you have a fractional share. But now you're investing in things that really interest you, which gets a completely different feel than index funds. Like, let's be real. Like, I believe in, low cost diversified portfolios, but like that feeling is completely different than I own a share of the market.
Yeah, I would agree with that. I think, what it is, it's me, when I passed age 35, I think it was a little bit of a wake up point. Cause like, I rent my apartment and I don't own a ton of things. I don't have a car anymore because I'm in New York. And you start changing what your view of the future is going to be like. It's not going to be the same view that your parents had. That doesn't necessarily mean the old way of investing is bad, or having like, money in a Vanguard account, or having like being in the NASDAQ 100, or having one of those low cost mutual funds, or having a 401k. None of that's bad. But at the same time, the on-ramps now exist for so many different types of investments. It just so happens that a regular retail investor is still left out of that conversation a lot of the times, because even though the on-ramp might exist, the idea of like investing in a baseball card, or investing in, a 1980s Ferrari, or something that isn't one of those mutual funds, or isn't sort of, a general market ETF, that's a little bit harder for people to wrap their head around. So for us, telling the stories is the draw. It's the most important part. The idea that, listen, here's this Michael Jordan rookie card. There's around 300 of them that are graded like this. And here's what the price history has done over time. And you had that sort of, visceral reaction to the card and knowing the person and understanding that's his legend, but there's the financial returns that come with it. And now we have the on-ramp for it. All that package together is really interesting to a new young investor who already recognizes what those ETFs are and what some of the safe investments that their parents told them about when they were younger are. But this is another alternative, another option to add to your portfolio. And now you have the option to do it.
Yeah. And I really believe it should be like a piece of the puzzle. Like, I'm not sitting here being like, I mean, some people might do it, but I'm not sitting here to be like, okay, let's go throw 100% of your net worth in items on Rally Road. But where I think that really fits in is like our generation are the people that have like a part of their portfolio they like to manage, whether that's on Robinhood or market or some crypto or whatever, where they're like, this is what I believe in. I want to allocate part of my portfolio to this. Maybe it's 10%, maybe it's 20%, whatever. Like, I feel like that's where Rally Road fits in. Like, when I talk to my clients, I'm like, hey, you're doing really well, 80% diversified. Like, let's find a place to take a little bit more risk. And Rally Road is one of those places that I list of like, if this is something that interests you, this is a really great place to get you bought in, get you to have a little bit of fun and invest in things that you might believe in, which can help you stick to that other part of your portfolio even better.
Yeah, you hit on the head, and you guys know this. There's more advisors and more people in those sort of networks that are chasing a little bit of alpha, but understand how this works, that have a different perspective than previous generations. I think that's the biggest part of sort of what we've, at least at Rally, seen happen, is that where finance at one point, and not that long ago, was very much a zero-sum game. It was, here's money, it goes into a thing. At some point down the line, that thing will be a little bit more expensive, and I'll get my money back, or I could borrow against it, whatever it was going to be. But now it's like the ability to move in and out of things is really important to a young investor. The ability to diversify is really important. The idea that I'm finding something that my friends don't have yet, and it's just like I could tell that story and put it in the group chat and say, I just invested in this, first version of an Audemars Piguet watch, and you guys can too now. All that element, that storytelling, is a really important part of the way we built this product, but it's also a really important part of the lives of every young investor now. And whether it's on Reddit or it's in Discord or it's in a group chat, you want to get something you care about, tell the story to others, and kind of lead that charge a little bit. I think that all the young investors now, they still respect the ability to sort of get back 6% or 7% regularly. But also, when they have the opportunity for 20 or 30% in something no one's ever heard of before, they're way more willing to take that risk and bring people with them too,
Yeah. And it's like, especially some of the things that I've seen recently on the platform are like a thing I didn't even know were possible to invest in, like the T-Rex skull, or I think the Kobe, the floor from Kobe's last game that was signed. Like, those are one of a kind things that just no one ever really thinks that you can invest in. And on the platform, like, you can just tell like how much effort and like focus you guys put in on like UI UX. Like, it's just so clean, and you can like kind of evaluate the investments just like you would like a normal stock. Like, there's analysis, like price history and everything on it. And I just think that's the coolest thing. But I was kind of curious, like, how do you like really go about finding the investments and like go about purchasing them and then getting them on the platform, like available to invest?
Yeah, that's the thing too. Like, we never want to be an algorithmic data only platform. Curation and emotion is a huge part of what we do. And everybody forever, it's always been like, take emotion out of investing. And even like I still do it. Like, it's impossible to wake up on a day when, futures are down 3% or 4% and think like, all right, I'm going to go find some opportunities today. It's defensive. It's always a little bit scary. You know what I mean? And when things are up, you think it's the greatest thing on earth. When things are down, it's the end of the world. So when we source, it's data driven, but emotion's a big part of it. So we have, this in-house acquisition team that uses a data driven approach, and we evaluate thousands of individual assets a week. And that takes into account all sorts of different factors. So that's the historical appreciation, the rarity, the provenance of an asset. But we also track like that social and cultural relevance too. We want to make sure that an asset is important now, but it's important in the bigger picture too. So, and it's going to be something that's important in the future. So we look at like big franchises like Pokemon, which might be in a little bit of a down period now, but we believe that asset class long-term is going to sort of be relevant and always be in the conversation. So that's something that we always look at, independent of where price is right now. In terms of the way that we get it and where we get it from, we'll buy opportunistically if we see an opportunity to do so. So often we'll get people that come to us, and either an estate or it's something that was passed down, or it's somebody who wants a little bit of liquidity that they haven't gotten because they've been sitting on an asset for a long time. And if they want cash, we have sort of a credit line that allows us to buy opportunistically and still get the best price both to the seller and to our buyers on our platform. If we see something at auction the same way that we feel like is undervalued or we feel like is really important and it's a one of one, and like that Kobe floor is an example of it, that was only going to be available through auction. So, we had the conversation with the auction house. We figured out what our top and our bottom might be, and we fit right into a range where when it was time to make that purchase, we were the last bid and it made sense for us. So we'll do that as well. But a lot of times what we're seeing more of now is people who they've made a good investment. They bought a baseball card or a watch or even an NFT at a really great price at a certain point in the past. They want to get some liquidity out of it now, but they don't want to part with it because they still believe in it. So we'll do kind of a shared equity model where they'll say, I spent 100,000 on this. It's up a couple 100,000 on paper now. Give me back 50,000. I'll maintain 15, 20% of it, but you guys keep it. You run the IPO and it will play it on the secondary market. And that's it. So we securitize the portion of it where we maintain, the asset, the voting rights, all the elements that go with it, but somebody who's made money on paper gets some liquidity out of it. So all those factors together have created this world where we're getting access to the best stuff, both inbound and through our network. We have a great group of advisors around us who are literally all over the world sourcing assets for us on a regular basis. And when something that's really unique, that's a one of one, whether it's a dinosaur fossil or an NFT comes across our plate, it's something that we're able to act really quickly on it. And I think sellers appreciate that too, as opposed to going the auction route where they're locked up for a year and they're paying a 25% premium one way or the other. It's become a really unique and approachable model for both sellers and buyers.
Mm-hmm. Yeah, it's almost like created almost like a whole new market with the liquidity factor. It's like these assets would never be really moved from their original owners unless it was an auction thing. And it's now almost kind of like nostalgic a little bit that you can trade Pokemon cards as a stock now. And I just think that's the cool, like nostalgia is super interesting to me. And I can like feel that like coming through a lot of the stuff on Rally.
Dude, it's a must, man. It's like, we were throwing around like taglines really early on. And the first one that we landed on was nostalgia pays off. That was the idea. And it was just exactly what you said. It's like, everybody has these aspirations and these things they care about from when they were kids, and turning those aspirations into equity has always been the goal. It's like, I want to own that thing at a certain point, but it's hard to say I'll own, the mansion I remember from like a picture when I was a kid. It's just right now, it's not doable. It's not going to happen. The cost of living keeps going up. The cost of everything goes up. The cost of housing and everything is wildly up. To get a mortgage is super tough. All the pieces that are working against a regular person to achieve those goals and to turn those aspirations into something you own are impossible right now for the majority of people, myself included. So to do it in a way where you put it into a portfolio and start the conversation there has been a really meaningful part of like that nostalgia and that collecting journey for a lot of our investors, because they see it as like the first step. I think a lot of them, we always do a bunch of user interviews and we talk to, I talk to so many of the people that are on our platform, talk to people in the street, and my family and my entire life has become talking about Rally. And that's just how it always is when you're a founder of any company. But it's because we were the users to start. We're so passionate about what it is and the things that we're doing right now. It comes out. And the first thing I talk to people about when we talk about Rally, they bring up something from when they were a kid, whether it's a comic book or a card or something. And they're like, oh, I had and I lost it, or I gave it to a friend, or like you reminisce about this time that happened way in the past and you create your own little story around it. We can kind of package that whole story up and bring it back to life for a lot of our investors. That's the first step to owning that thing that they wanted when they were a kid in the physical form at a certain point down the line too.
Yeah. That makes so much sense. Cause if you like, I feel like it's one of the biggest marketing plays today. I mean, think about releasing Jordans that were from when we were a kid, like those ones that you thought you always wanted, but your parents didn't buy for you. Like they're re-releasing now because it's really cool. Or you look at like, I think it's Paramount or Peacock, like they have the replay of the Full House and like literally all of these old shows, Fresh Prince of Bel-Air, et cetera, because people just want that same feeling that you still had when you were a kid, and you're recreating that, which I think is so cool. But question for you. So like we've talked about alternative forms of investing, like what really falls under that class, and why is like it becoming such a popular thing for people other than kind of the nostalgic feeling as a kid?
Yeah, you know what it is? I think it's twofold. One part of it is that nostalgia where it's like, oh, this is an investment now, and that's become everything else. But the other side of it, I think what happened right at the start of the pandemic and what you saw in the meme stocks and what you saw in crypto and all these random derivative coins that were popping up is that you had a bunch of people who now had a lot more time to sort of live in that nostalgia and understand kind of their feelings and their emotions a little bit more. And to take these little mini journeys with that time led to a lot of new investment decisions that I think a lot of them never knew existed before. And, people make decisions very much in the moment, and you see something and you kind of like act on it. With money, it's always been the opposite. It's always been like, think about this, do a bunch of research, talk to somebody who knows better. What happened was, and you saw it with GameStop, you saw it with a bunch of different cryptos, you see it with all the investments on Rally, people turn themselves into sort of, they get a PhD in a new asset or in a new alternative over the course of, 3 or 4 days, as opposed to pre on-ramps that existed, pre-YouTube, pre sort of, communication with friends who knew what was going on, pre-advisors who were accessible. And they were sort of just like, it sounds cool, but I have no idea what it is. So you had this huge educational component. Then you had sort of, the alpha that started to exist in making these kind of bets really early and being in with that group of people who were on the ground floor. So you had these two sort of converging things happening at the same time, whereas there's new access to information and all these new ways to invest all living together at the same time. And people started thinking about like, what is an alternative asset? And there was anything that wasn't a stock had this new opportunity. So anything that wasn't available on Robinhood or wasn't available, on Fidelity or TD Ameritrade became an alternative asset. And that became just cooler and more interesting to a lot of people who were just starting to dip their toes in, that now were armed with all this new information because the asymmetry didn't exist anymore the way it used to. And then it became this explosion. It's this thing that we're never going to be able to go back now. I think we as a business at Rally, having been around for 5-6 years almost at this point, the momentum that we saw from 2020 to now is really based in this new form of education and investing that has taken retail investors on a brand new journey where now they're looking for alternatives and they're going to dictate and define what those alternatives are in the future.
And I think it's a demographic switch, like shift too. Like our parents' generation was be wise with money. Like your goal was like, be wise with money, whatever that means to you, does it. But now it's like, yeah, I do want to be wise with my money, but I want to put it behind something I believe in. Like the investment philosophy has totally shifted. And so like this Rally Road has just come at like the perfect time. And what I guess for like the consumer who's like, oh, Rally Road sounds really cool. Like T-Rex, like old Ferrari, whatever, I want to invest. Like, what does that look like? Because I think people don't like, okay, cool, I invested, but like, how is it a share? When can I buy it? Like, how do I get to sell it? Can I always sell it? Like, what does that look like for the consumer?
Yeah. So we try and make it as simple as possible in that we put all the information in front. We allow you to buy shares and we allow you to trade those shares on our secondary market. But the construct and the details around is that basically each individual asset is its own investment. So it's got its own, whether it's a fossil or an NFT or whatever it is, it has its own total value, its own share price, and its own investors. And each individual asset, it's a Reg A plus investment is what we use as the construct that's qualified by the SEC prior to launch. So it's kind of very much, like the same or similar to the way that like a stock might IPO. That's the first way we do it. So we open that initial offering for an individual asset in the app, similar to an IPO. It fills with investors. Once that offering is fully subscribed, we maintain the asset, we store it, we insure it on behalf of those investors. And then 90 days later, after that short lockup period, it opens for bid-ask trading on our secondary market. So it's really, we try and do it where it feels kind of similar to like a company before it goes public, you're just getting in, then it goes public and it trades. Then along the way, similar to the way there might be like a buyout or a stock might get taken private, we allow for buyout offers to come in. So every now and then, and far more often now than it has in the past, you'll have collectors or people with money who want to take over the whole asset and take physical possession. So they'll offer a premium to our investors, which they vote on over a 48-hour period. And if majority say yes, it goes to our advisory board. They check all the boxes and we sell it off. And then you get a full payout at that point, as opposed to trading on the secondary market. So we tried to sort of create like that full cycle experience of finding something you love, getting in early, being able to trade it. And then if you made the right decision and somebody comes in and buys it at a premium, you have the choice whether you want to sell or keep it.
Is there like enough secondary buyers where like if I were to get out, typically I'm able to pretty quickly?
Yeah, so we moved from trading windows, which are kind of like a Dutch auction, to a semi-continuous trading over the course of the last 4 or 5 months. And we've seen big volume. So, whereas every sort of, month or so, you'd get liquidity on Rally previous to the new system. as of late November, early December of last year, it's a pretty liquid market in a way that, bids and asks are matching and executing all day now during market hours. So
Awesome.
whereas normally, we would have seen, a couple million in secondary market volume. Now over the course of, any given month, we'll see, significant millions traded on Rally on both sides of the order book. And for a platform that has, call it 40, 50 million under management right now, and that'll grow significantly over the course of the next 4 or 5 months. It's created a new form of liquidity for people who are on our platform who might have been medium and long-term holders. A lot of them now, like, you'll be able to sort of come in the morning, make a good decision, and potentially leave end of day with money in your pocket or with something in your portfolio that you didn't intend to. And I think that's what we've always wanted to do, is add that liquidity on both sides of the transaction for sellers to bring assets to Rally, but also for buyers to be able to sort of rotate in and out of assets a little bit more fluidly.
Yeah, and I like how like thoughtful you guys have been like throughout the whole process. Like you were saying, that almost like kind of mirroring what it looks like if a company was to IPO. And when you were talking earlier about like kind of the shareability of just like whatever assets they're buying, like they want to tell their friends. I've just kind of been curious myself, like with the like I'm in graphic that gets kind of like prompted to share on Twitter, like do you guys have like any direct correlation, like this has been like one of our biggest like growth things, or just kind of what does that kind of look like? Because I thought that was awesome.
Yeah, I mean, it's funny to say like that. It's that little amen thing, and I'll be the first. I stole that from Nike, from doing the after Nike does the sneakers drops,
Yep.
and everybody has the amen and the whole thing with like the
You're
sneakers.
right,
Yeah,
they
that was
look similar too.
I mean, listen, the good artists steal. I'm trying to do, if someone's already done it really successfully, I'm not trying to reinvent the wheel. I'm trying to make sure it's something people recognize. That's the biggest thing, is like familiarity. And this is what succeeds. This is why, NFTs are going to succeed long-term, but what they need is creating familiarity with process. That's what we've always tried to do. So in terms of shareability, a lot of that came from the discretionary apps and the products that we all use here and that our whole team used, that are the most viral, are the ones that create conversation. We've never had a true marketing function here at Rally. We still don't have, I don't think we have anybody here with an actual marketing title other than our product marketer who works inside the app. But it's something that we've always looked at, building those loops to make sure that word of mouth continues to sort of drive traffic. And that's always been the biggest driver of traffic for us. So the I'm in graphic, the idea that it's shareable after you make an investment, all of that's been an important part of sort of, creating a world where you get a recommendation from the people that you trust. We never want to put marketing directly in front of people to say like, here's the billboard, go to Rally. You're the only person you're ever going to hear from is the company. We want to make sure that the people who are using it are the ones talking about it. So the biggest driver of traffic for us right now has been, we've had a couple of record buyouts, and they've happened recently. So we sold off platform from an unsolicited buyer who came in and wanted to buy all shares at a premium. Pele's rookie card for $1.3 million a couple of weeks ago. It was the highest price ever paid for any soccer card, and it came off Rally. Before that, it was Mario Brothers video game. This 1985 version is the highest graded copy. It sold for $2 million in August, and that was, again, by a long shot. It was the first $1 million NES game, and it broke the $2 million mark. It was the most expensive video game ever sold by far, and that turned into a 1,200% gain for the investors who got in on that asset. Those are outsized gains. It's not always going to happen. There's never investment advice. And you guys know this, obviously. Always say never investment advice. That's a disclaimer. But that loop turned into, that money, sort of to give you the high level, didn't leave platform. It went into other investments on Rally. So even though we turned a $140,000 investment into $2 million, the virality of that and the conversation that came from it led to way more investments on Rally from new users, from existing users, from those who got paid off from the investment, because they realize, it validates platform and it validates our curation. It's literally a record price. You're not going to get that anywhere else. But also people realize, there's something real going on here. And that's whether it's someone posting the I'm in graphic after investment, whether it's news that comes from a buyout, whether it's someone in the group chat saying, I just made 1,200% on this Mario Brothers game, to people who it never made sense to before that. All that leads, we're confident that all will lead back to platform without having to put up 1 million ads with a click through that leads you to an account. That's always been the biggest driver for us.
Yeah, and I feel like your guys's investor retention has to be through the roof with pairing like the merch drops with the investments. Like, I don't know if it's for every single one, but like I think I might have tweeted something last year about how it just felt like a supreme drop because it was like available to anyone, but there was only 100 of them, and it's like paired with this asset. I thought that was like one of the smartest like marketing things I'd ever seen, and was curious like if that was like in the plans from day one or just kind of how that came about.
Yeah, I mean, everything we do is intentional, but at the same time, we've gotten lucky too, in that so we always try and attach something unique to individual investments. So with like all the NFTs, we did like really nice custom enamel pins for all of our Bored Apes and all of our crypto punks, and that was sort of bringing like a physical to a digital, and those blew out and sold out quick. We also have done we've done card sets from scratch. So we did an offering with Topps a couple of years ago, which lit a fire with us to sort of do our own version of cards. So we worked with Keenan Wells, who works on the Pixel Hall of Fame, who's a great sort of 8-bit and 16-bit designer. And we took some of the most historical characters on Rally and put together like a full card set, a 732 card set that had like refractors and holograms and all the cool stuff as inserts. And then those sold, we did, I forget the number that we did on that, but out of those, that full set sold out in something like a second. It was like literally as soon as they opened on Black Friday, it sold out immediately. Those were on eBay right after at 10x, and they were selling like crazy, and that secondary market still exists. Today, we had a Michael Jordan ticket that went live, the first ticket from his debut. We had a full gold recreation of that ticket as a physical piece that goes with it. You could purchase on checkout. Those sold out before the asset sold out. So it's like, it's become this thing where for us, the long-term goal, because you're putting these digital investments in real things into your portfolio, a lot of people love having that real physical piece. And I know me personally, I love having like a physical representation of the stuff I care about. Giving them the piece of that goes with the investment has always been a huge draw of traffic for us. And when we talk to our users, like we just finished a set of user interviews to understand like the needs and the habits of investors. And we ask questions around like, what's your most memorable part of Rally, good or bad, the most memorable experience you've had. And it was like 40% of them said it was like the asset that they bought or that they received for making a certain purchase on checkout after making an investment. And that to us sort of reinforces the fact that physical and digital can and should live together. And it's been an important part of the marketing product for us too.
It's what honestly caught my eye from the first time is like I saw somebody, I don't even remember what it was a couple of years ago. Somebody bought something, they got sent in the mail, like a little tangible thing. And I was like, wow, that is like such a cool marketing piece that got added on. I mean, to me, it totally makes sense. And I think it's actually interesting what we're talking about because there's like, if we equate this to NFTs, you guys have NFTs, you can buy shares on there. Like, I think hearing all of these stories of what you say is kind of interesting because everybody looks like NFTs have no value. But then we look at like a Pele card that sells for $1.2 million or like a video game from 1985 that sells for $1 million. Like technically those don't have value except for the fact that we say they have value. People think they're cool. There's a whole side of this world that would be like, that is the dumbest thing. Why would I ever waste money on that? And there's a whole side of the world that's like, oh my gosh, I just wish I could own part of that Pele card because, changed soccer forever, one of the best players of all time. And I think all of this just boils down to the fact of like, people find value in different things and that's okay. It's just, I feel like the problem is created when people are like, that is stupid because I don't like that. Because I mean, what, like I might not want to own part of a T-Rex, but like maybe I do, or I might want to own part of an old Ferrari because I really like cars. Like you can have your own things that you really like and you invest in, and they all can have value for the different reasons.
Yeah, I mean, to me, it's like, the cash economy kind of died a little bit with COVID. I think everything is digital now. Every purchase was a version of a digital payment, and it happened quick because nobody wants to like touch money or interact with people. So I think part of it was like understanding what digital economies might look like in the future. The other thing is that, we want to build for that future, not for the moment. And the idea of a purist saying what should or shouldn't be an investment or should or shouldn't be a collectible, to me, it really limits your scope, and it kind of limits your aperture and what the world actually looks like. There's no way I could have predicted what was going to happen with, Michael Jordan's rookie card. I probably had one like that. I used to have every single card, and Jordan would kind of always go to the side, like Shaquille O'Neal would always go to the side. But it was also like when you're 6 or 7 years old, you're not thinking about anything as an actual investment. You're thinking about it like, oh, it's the thing I should have. To say that a 10-year-old now or a 15-year-old now is not thinking about NFTs as the same way that we were thinking about a Shaquille O'Neal rookie card in 1997 That's stupid for me to think that. I have no idea how a 14-year-old thinks right now or a 15-year-old thinks right now, but that's the future. So when we build, I don't want to build any way, shape, or form with blinders on to say I know better than the next generation whose habits, whose experiences, the world they live in is entirely digital. It's hard for me to say definitively one way or the other. It's not going to be like this. It's going to be like the way I understand, because that would just be like it's getting in front of a moving train. You see what's happening right now and you see the momentum. It would make no sense for me to try and guess, or for anybody to try and guess what the next generation will want to collect. All you can do is kind of pay attention to the momentum and pay attention to what's happening in the world.
Yeah. Have you ever thought about NFTs for you guys? Like in the future, as that brand builds up, like, I mean, I don't even know if this is legal, but it'd be super cool to have NFTs, have a community where people get like early initial access to future investments that are coming about, or like early choices at gaming. Like, I mean, feel like it almost could be a natural evolution, or you buy this product, get an NFT in certain numbers, and there's only 80 of those for each product. Like,
so we've done a small set of NFTs that we released really quietly with our first CryptoPunk, and then again with a Wilt Chamberlain ticket. And what we did with those was, it was a very small amount. We sold them for $100 at checkout, where you didn't need crypto, and we had those transferred immediately after. So it was a really easy on ramp. We saw that it was something like 80% of the purchasers of that NFT, of those NFTs, of the 350 that we released, it was the first time they'd ever bought an NFT, because they didn't understand a lot of the concept around it of getting a wallet, buying ETH, buying Ethereum and Coinbase, transferring it to that wallet, using that wallet to go onto OpenSea, make the purchase, put it into your other, like all that was very intimidating to a lot of people. So we did it as an experiment to see what would happen if we did it just as a $100 flat fee, no gas fees, make the purchase. And we did hand holding to set up wallets for those individual users. What we did after that was we gave early access to that Pixel Hall of Fame drop, so that which was almost impossible if you weren't kind of whitelisted from the NFT to get access to that card set, because it sold out so quick. And it was a massive success. So now we'll be building around that. And we're starting to think about what it might look like. And, on the record, off the record, like talk to our lawyers a bit about what it might look like and how we could kind of tie it into investments and a few other things that we're working on right now. And it's certainly, we have a great community right now. Like we don't have a Discord, and we're not trying to sort of be an NFT product. At the same time, we have such a supportive experience that we've created with our community. And we have so many feedback loops that we tried to create to activate that community, which is now, a few 100,000 people, and say like, here's the Rally NFT, here's what it gives you access to, here's what the roadmap looks like, is a big part of the product thinking right now, is what I'll say. So inside the calendar year, there's no question in my mind there'll be some digital component and representation of your participation on Rally that leads to added benefit of being an investor on Rally.
Yeah, and I think touching on like making just like the on-ramp into like getting an NFT a lot easier and just like bridging that gap. I'm gonna feel like an idiot if I'm wrong on this, but because you got the NFT out of that vending machine in New York, that was the coolest thing I've ever seen. Like, did you just like stumble across that, or did you know?
Yeah, nah. So my our lead product manager here, Alec Levine, is like a super genius, and he has a super genius family. And he told me that one of his brothers was working on something similar. And he's like, I think it's in your neighborhood. And then I was getting a COVID test at a city MD on the same street. And when I walked out, I saw the billboard, and I was like, there, the storefront. I was like, there's no way. This is exactly what he was talking about. And then I stumbled in, and I was just shocked at like at the way it was constructed in such a thoughtful way. And it really kind of had this nostalgic feel, everything from the aesthetic, and it's like purple neon lights, and it's a vending machine from the 90s. It feels like you're in 1995 in what people thought the future was going to look like at that time. It was just a perfect representation of like childhood. And that was this moment where I realized, I was like, the idea of digital meets physical, to me, without having to worry about the gas transaction fees and having a crypto wallet and all those pieces, a little bit of hand holding and a little bit of nostalgia packaged up in a really easy to use process, is going to be the on-ramp for the 99.9% of people who have yet to purchase their first NFT. And that vending machine was like a really good interpretation of it.
Yeah. That's actually super cool. I didn't know about that.
Yeah,
we're in a crazy world right now, man. It's like anything, it's anything goes, but at the same time, the bad stuff burns out really quickly. The good stuff has staying power. And I think that's where you're going to separate the haves and the have-nots when it comes to NFTs in particular. There's gonna be a lot of trash projects that keep coming out. There'll be great art. There'll be bad art. There'll be great projects that have a lot of utility. There'll be bad ones that lie and say there's utility and there isn't. But what you're going to see is that, 6-7 months from now, we know it's sticking around, and the good stuff that really elicits an emotional response from people, whether it's got utility or not, is going to stick around. I think the familiar experiences like a vending machine or like just a design that you recognize from childhood, nostalgia that goes with it, are going to be the ones that have staying power, no question.
Yeah, that makes sense. Well, thanks. I feel like that's like a perfect way to end the episode. We really appreciate you coming on. Everybody, thanks for listening. If you haven't, go check out Rally Road. Super cool website. You can invest in a T-Rex head or full body. I don't know I just saw the head. So you can invest
where dinosaur fossils is one of those things like everyone recognized it from childhood, but it's also like, it turns out there's a lot of really rich people want to put them in their houses too. That was new news to me in the last couple of years.
That's interesting.
Yeah.
Well, thanks everybody. And we will see you back again next week.